Joining us now to discuss the crypto markets and how they're reacting to BlackRock's Ethereum ETF rumor plan, whatever you want to call it, is Diffuse Funds founder and CEO Kenny Estes. Welcome, Kenny.
Thanks for having me in TGIF.
Yes, indeed. So let's. You guys are an alternative. Diffuse is an alternative fund platform. You offer different investment products, including digital assets. Not the only thing. So, what's your take here on this idea that BlackRock might be wanting to create an ETF that holds ETH?
I think it's generally bullish for Ethereum overall. I would kind of go back to a comment that was said earlier in the program around BlackRock, in particular being well connected. They're not doing anything without knowing what the outcome is, in my opinion, right? Most of this is probably pre-negotiated, or at least there's a wink and a nudge understanding with the SEC before we put an application in. So the fact that they're putting in an Ethereum application, to me, sounds like it's a predetermined outcome that it will be approved. It's just a matter of when it will be approved. Now, that in and of itself isn't overly exciting from a technical perspective, because an Ethereum's futures ETF exists right now and actually launched a month ago yesterday. But the volumes are almost non-existent, right? I think it was 2.5 million on the highest day yesterday. From a technical perspective, a spot Bitcoin, a spot Ethereum ETF is not going to be any better at tracking Ethereum than the spot was. But the difference is having big institutions putting massive amounts of marketing and business development resources, and having Larry Fink on CNBC talking about how Bitcoin is a global currency. That is what's going to drive institutional adoption and really push the price of both Bitcoin and Ethereum to the next level.
Right, but I look at this and I say, okay, well, from a risk profile, the ETH a spot ETF is not much different than a futures ETF. If I'm holding one or the other, there might be some differences on return, but generally volatility and returns will look like each other. And as you mentioned, the futures ETF gained very little excitement relative to the Bitcoin ETF that came out during the height of the previous market. In that situation, the Bitcoin futures ETF came out as prices were moving up. In this situation, prices are moving up because of a rumor. Supposedly, they're moving up at least because of a rumor that this will get approved. Kind of different ideas. What makes us think here that a spot ETF would have better traction, more interest than a futures ETF? If from a portfolio management profile, I'm looking at this and I'm like, they're basically the same thing.
100%. Futures ETF tracks Ethereum or Bitcoin at about 99%, right? You lose a little bit from interest, just that's how forwards work or futures work. The spot ETF is going to be about 99% as well, because it's going to get dragged down by custody fees. So from a technical perspective, you're 100% right. The spot ETF in either Bitcoin or Ethereum has almost no difference versus the existing futures one. The difference is all about how it's coming to market and who's pushing it. Having BlackRock as a significant sponsor and normalizing the idea that institutions should now have this as part of their portfolio, which is right now starting to happen, but it's largely seen as retail investors are the only ones who touch crypto, right? So that mentality shift is what's going to change with all of the marketing and business development resources being plowed into these new products. Now, to keep that in perspective, right? The total market capitalization of crypto is about $1.4 trillion, which sounds like a big number, but that is less than half of Apple, one company. In the grand scheme of things, cryptocurrency is a rounding error in financial services today. If you start to see institutional adoption and it becomes normalized to have 2 to 5% of your portfolio in digital assets because they keep hearing about it from every one of their biz dev resources, that is going to have an incredible impact on the price of both assets.
Kenny, what are the chances that a spot Bitcoin ETF doesn't get approved?
Again, I'm going to be talking my book a little bit here, and I'll say almost zero. right? I think it will get approved. And the biggest reason for that is because BlackRock put in the application. This is probably the most well-connected organization on the planet, certainly when it comes to regulators, the SEC in particular, right? They're not doing this on a whim and hoping for the best. I don't think those applications are put in unless they understand exactly what the outcome is going to be. Now, from an optical perspective, they still need to jump through all of the hoops. So like Nick said in the previous segment, it's not going to be in the next month or two with we get an Ethereum spot ETF, but it certainly isn't. 6 to 12 months seems reasonable. The Bitcoin spot ETF, interestingly enough, yesterday the SEC came out with a video basically saying our job is to protect you, the public, and you get to choose what you invest in. That type of video typically comes when they do an approval that they don't really like. So personally, I would not be surprised if we see a Bitcoin spot ETF approval within the next week.
So you think if we do see an approval, maybe it's going to be with a little bit of reluctance from the SEC? You think they're maybe getting forced into it?
I think 10 years of them fighting back is a pretty good indication they're not exactly on board with this approval, right? So yeah, I think that we will see them overcoming the reluctance and giving the market what they're demanding, and frankly, what the judge is telling them they need to do, because they are, like Nick said, they're in an inconsistent state, right? You can't have a futures ETF and then deny a spot ETF because apparently the latter is more prone to market manipulation. It doesn't make any sense. Now, there is an argument around custody, right? You don't have to custody anything in a cash settled futures contract. That is a legitimate argument, but I don't think that's where it's going.
But there is a difference, and that's the futures ETF is based off of futures contracts traded on the CME. And granted, we can argue about where the CME and how the CME gets its pricing versus a spot Bitcoin ETF that would be based off of something a little bit different, right? So ultimately, the responsibility for the futures ETF falls with the CME and the CFTC. And it's almost a way for the SEC to say, well, we don't really have that much responsibility. This is more of a CFTC problem when it comes to pricing. And their solution is something we're comfortable with because they're using their wackadoodle pricing mechanism for settlement. With a spot ETF, it's a little bit different. It puts a little bit more of the pricing onus on the private corporation that's going to come up with the pricing for every day for their ETF. And it seems like that's an issue that the SEC has a problem with. So, I mean, can you at least recognize that difference? And how would you get around that difference?
No, you're right. They are going to have different pricing mechanisms for sure. But I would argue that that's actually largely inconsequential because at the end of the day, both pricing mechanisms are going to have to be based on actual on-exchange trading activity, right? In very liquid contracts. And in a former life, I was a high-frequency trader, right? If those things got out of whack very much at all, that's an arbitrage opportunity, right? Those things aren't actually going to deviate in virtually any scenario I can see for a very liquid contract like Bitcoin or Ethereum. So it has a negligible impact. But I will say the custody one is a knock on the spot ETF. Right now you have a third-party risk, Coinbase, in pretty much all examples of this larger entity not properly custodying those assets.
So, but getting back to this whole thing is that one of the biggest issues, of course, is that the spot market is controlled in a huge way. The centralized spot market is controlled by an entity that the SEC is currently investigating and is very concerned about, first of all, from not being controlled, from being domiciled outside the United States, specifically questions about its quality of what it's actually doing. I mean, the SEC is basically, in so many words, trashing it. I'm trying to be diplomatic here because there are a lot of lawyers who will get involved. If I say, first of all, what the SEC is probably really thinking it is, perhaps, I don't want to say criminal operation that should involve its CEO going to jail, but I don't think they're necessarily not saying that either. With that said, why, isn't that kind of the big issue here that we're not addressing?
Controlled, yes and no, right? It's an exchange. So at the end of the day, yes, those assets are on on the actual exchange. I'm assuming you're referencing Binance. I'll say it in name so you don't have to take the legal risk there, and Binance US in particular. So the same way that FTX is holding assets on behalf of the customer. But again, the most likely scenario where Binance is a bad actor and is doing what FTX did, which I'm not saying is likely, but let's say worst case scenario, and they're going out and I don't know, have they bought like stadium naming rights? I don't know. If they're misappropriating those customer funds, right? What that's going to happen is that Binance, or the Bitcoin price, the Ethereum price on Binance, is going to drop. And all of the other exchanges will keep exactly in line with it, because arbitrageurs will make sure that it stays exactly in line with it. Or if we see an FTX situation where they shut down, they just take it out of both indices that they're tracking against. So I really struggle to see a scenario where in either the spot or the futures ETF, the price that they're tracking against gets out of whack from one another.
All right, Kenny, we are going to have to leave it there. Thanks so much for joining this morning and providing that analysis.
Thank you for having me. Appreciate it.
That was Diffuse Funds founder and CEO Kenny Estes.